Are you ready to take your investment game to the next level? Introducing Digital Investor, your ultimate guide to mastering the digital marketplace. Whether you're a seasoned pro or just starting out, Digital Investor brings you cutting-edge game theoretical strategies, expert insights, and real-time tips and tactics to analyze, evaluate, invest, and grow your wealth. Don't miss out on the digital revolution. Visit www.nickblacknext.com and start your journey with Digital Investor today.
Yes, we hope Howard gets well. We can't bash Howard if he's not healthy. You can't kick someone when they're down with their spleens and all their guts at the mercy of mediocrely trained medical attention. No, he's got to be healthy for us to kick a man when he's down. You can't really kick a man when he's down when he's really down. You can only kick someone when they're down when they're not really down. That's the tricky part. All right. Let's see. Hello. Treasury control stable. I know. Well, they wouldn't do it. They would indirectly do it. It would be, we'll talk about it. We'll talk about what they say and what they can and can't do, which they can't do much. There's a lot of politicians that are against that. If you had a U.S. stablecoin, I mean, eventually we will, but it won't come from the Federal Reserve because the Federal Reserve is not a government institution. This is the thing that the Treasury seems to miss. Other countries have central banks that are central banks. They are extensions of the government. The Federal Reserve is not an extension of the government at all, period, full stop. The Board of Governors answers to Congress and they make recommendations, but they're not part of the U.S. government at all. No more than Taco Bell or Federal Express. People still seem to miss this part. Okay, macro-wise, before we get into our stuff, macro-wise, stocks are down, second day in a row. It's funny. I mean, the AI thing is at a point where a lot of hype was pushed into a lot of these companies early on. A lot of these things rocketed. And yes, AI software is making a big difference all around. However, people want more. They're like, I want more. So the S&P's down a bit. NASDAQ's down a bit. Looks like second day decline. Dow Jones down a bit because Microsoft. So Microsoft's getting punished a bit. After their revenue guidance disappointed, even though they had a beat. They beat on earnings, and then Meta dropped. So it's like they're like, we did everything we told you. We beat. They're like, that's not enough. We need you to overbeat. Oh, all right. Well, okay. Meta dropped more than 3% after the Facebook parent missed the street's expectations for user growth and warned that capital expenditures would significantly rise in 2025. Why? Because they're building into a lot of VR and AI stuff. And of course, Meta beat on both top and bottom line numbers in the third quarter. So they beat everywhere, but they didn't beat enough. So they beat off. Anyway, so some of the guys are basically saying, I think we've gotten to the point where AI enthusiasm and potential is not enough. These companies, while they are levered to those themes and hold favorable long-term growth profiles, are not delivering the rapid growth that is priced into them based on 2023, when AI really first made its kind of big international laydown and mass onboarding event, January, February, March 2023 with ChatGPT. So there you go. Alphabet, so Google, their shares rose 3% on Wednesday after the company reported strong revenue growth. Chipmaker AMD fell more than 10% as investors were disappointed by the company's guidance for the fourth quarter. So, and this tells you these things are all forward-looking. For anybody that was looking at GDP that came out, I think a massive portion of it was U.S. defense spending. That basically like weapons and tactical systems and like bombs and missiles. That is a very disingenuous way to get a good GDP. The PCE, which is personal consumption expenditure, showed a 12-month inflation rose at a rate of 2.1%. 2.2 is the target. So all these people that were saying inflation, you can look back and say, well, where is it then? Where is all this new inflation? Now, yes, I know they debase the currency. I know they print money out of thin air in places we don't see for a long time. There's a lot of things that get passed and money that gets moved around through non-judicial review where no one votes on it. It just kind of happens, or they vote on it and no one really talked about it. It wasn't public. That happens a lot in JR stuff. But from COVID on, we were in a supply shock. The supply shock hit. We saw prices of things go up due to microeconomic effects, little e, an obvious little e, like you could see it in real time. And this is the danger in not understanding the difference between why a thing is happening and that the thing is happening. Most people just saw that the thing was happening. Stuff's more expensive. This is bullcrap. Okay, but the why is important. And in this case, the why has been a supply shock. And most of these inflationary events are supply shocks. Now, if those transfer payments had been continual, right? And I mean transfer payments, government cuts a check to you, a treasury check, or unemployment cuts a check to you, or what's some of these programs. That really is printing money and spamming it right into the economy, because the transfer mechanism is from them to you, from the printer. And again, there's no printer, but you get it. From the computer, they create the money into existence. They sell debt against it, supposedly, and then they put it in your hands. That transfer mechanism creates inflation. But remember, inflation is pervasive and continuous. It's not, I give you $17, now inflation. No, because those things will resolve themselves pretty quickly. You'll have a near-term little price shock. So I think it's beyond any discussion whether we just dealt with a supply shock or sustained inflation. It's just nowhere. Nowhere you look is sustained inflation. That always and everywhere, pervasive, month after month, year after year. So be careful that you don't get sucked up into those kind of arguments. You don't want that to be the background of your thinking when you're looking at the macro. So good. Okay, so why that all comes in is because then the PCE, which is personal consumption, that's right around the Fed's target. And they've because every time the Fed has an inflation gauge that doesn't agree with their policy, they just pick a new one. So it used to be CPI. That wasn't enough. It used to be the 210, like the 210 forward, I think, the 2 year, the 10 year, and then it was the near term forward, which is the 210. And then they would look at the difference between LIBOR and SOFR. When that first came out, now it's SOFR. Now it's SOFR, and they didn't like those numbers because those disagreed with their policy of their tightening policy, which doesn't matter because it doesn't do anything, but it still matters that the policy exists. So that's the thing, is that these guys are driven by hubris and kind of pride. And so when things go against that, they kind of, I guess they get embarrassed. I can't really tell that they're ever embarrassed by anything, but anyway. So tomorrow we get payrolls and unemployment data. I would be effing shocked if they don't revise down September. But you get these anomalous events. You get these little heartbeats every now and then. And remember, when you're looking at payroll and when you're looking at JOLTS, we talked about JOLTS a few weeks ago and stuff like that. You're not looking for people that are fired, right? You're looking at continual claims for those that are unemployed. Who's still unemployment, who's having a hard time finding a job, because first stops hiring, then there's the lull, then there's not the firing, there's the hours start to reduce. So they slowly reduce your hours. Then they no more work from home. Hey, come on into the office. I don't want to come in the office. So you're quitting? No, I don't want to quit. I just don't want to go in the office. So you're quitting? So that's a kind of, what did they call it? What did we read that yesterday? A passive layoff, like a passive aggressive layoff. But it all starts with a lack of hiring. So you don't look for firing. When you're seeing like wide scale firing, shit is broken. You're already deep in a recession or worse. It's when the hiring stops. That's where everybody's like, that's when you should be paying attention. People don't really get excited about that, but that's really what you should. So the job openings, part of the JOLTS, that's pretty important. And also remember, sometimes those are bogus too, because a company will post, one job on 17 different websites. Is that 17 jobs? No, it's one job, and they're not really going to hire anyway. They just have to look like they're doing something. You can't be the company that looks like there's no more hiring going on. Consensus, that makes the MetaMask wallet, they laid off 160 people yesterday. They said because of the crypto environment under Gary Gensler and Elizabeth Warren and blah blah blah. They're listening. Everybody's tightening the screws. Maybe the crypto space is just more honest about it. There was a couple of companies that ditched quite a few people, and I don't know why yesterday was the day, but maybe they were all about to ditch people and they were waiting, and they're like, okay, just wait. Someone else will be doing some layoffs, and then we'll piggyback on those layoffs, and it won't just look like it's us. It won't be a sign of weakness. Anyway, so the next interest rate decision is November 7th. I mean, 2 days after kind of a crazy day. So there is going to be a lot of volatility. I was talking to Brandon yesterday, and I think the group, my thoughts are that on the institutional level, no one's going to wait till Monday to make decisions. So I think whatever's going to be done is going to be done today and tomorrow. Meaning, I would not be surprised if there was a pretty big pullback all across the board. I mean, anything that's got any risk attached to it, pearl clutching, sphincter puckering, whatever your choice of disgusting term is. Anyway, probably healthy if we see markets sell off. BTIG said they see a bunch of downside risk in the coming weeks. Yeah, no shit. So these aren't geniuses, but the macro is important just to pay attention to. Okay. So let's go through this. We're going to talk about The Treasury kind of wanting to take control of stablecoins via the Federal Reserve, which is real weird, and that's never going to happen. But that's also Janet Yellen. Janet will never have another recession. Yellen, while we're in a recession, the sun's never going to rise again. Okay. All right, Janet. All right. Anyway, we're going to talk about Kraken. They have their new trading app is customizable. You can like move things around. It's badass. I don't know if any of you, I'm sure many of you have used a lot of the customizable trading facilities and things like that. They're pretty sweet. Anyway, you'll be able to do that at Kraken. I'll show, there's a couple screenshots and we'll go over that. Franklin Templeton is tokenizing on the base network, which, via, kind of indirectly through Coinbase. That's pretty cool. And what does that harken back to? Optimism, which is $1.63 today. Oh, it's looking tasty. Anyway, and then we're going to talk about, I saw a cool video yesterday on Stoicism, and I thought, I wonder if there's some cool ways to take some of the old, thoughts of like Marcus Aurelius, because the dude was quite successful, and kind of flesh out some financial investment type ideals from that. So we're going to mess with that a little bit. But first, let's talk stable coins. All right. The U.S. Treasury Advisory Panel. And here I've even got, you know what I've got for you guys? I got a fancy ass picture. Hold on. You're about to get you a picture. Ooh. Anyway, the advisory panel says tokenization could be big, but may need central control. Yeah, thanks. The outside group of Wall Street leaders that guides the Treasury's debt management and the referred to as the Treasury Borrowing Advisory Committee. That's like some made up shit you see in a Marvel comic. What's this? It's the Treasury Borrowing Advisory Committee. Oh, is that like the TVA? No. That's the time something authority. No. This is the Treasury Borrowing Advisory Committee. Oh, got it. Tibac. All right. They shared their views on tokenized debt and warned about Tether. Well, the warning about Tether is an interesting one because we'll get to it. Anyway, this Wall Street brain trust of, I'm sure people you couldn't be in a room with for more than 5 minutes before you wanted to punch their faces off of their faces. These guys are behind U.S. Treasury Department's debt management. Yeah. They took a close look at tokenization and found that they like it a lot. Okay. All right. I'm listening. The advisory committee also examined stablecoins and argued that a token such as Tether's USDT could pose a significant run risk. Oh, you mean a complete counterfeit token with nothing behind it except for ill-gotten gains? Could be dangerous, run by a bunch of crooks outside the United States? What? These guys are in front of the curve, man. Anyway, the committee produced a report which also suggested that stablecoins may need to give way to central bank digital currencies in tokenization. I speculated this part a long time ago. There was a show that we did maybe 2 years ago. 2 years ago? A year ago. 2 years ago. Anyway, no. I don't know. Anyway, it was me and it was Jeff Snyder and it was Emil Kalinowski. And we were talking about wildcat currencies. And at some point, that doesn't work. And I think what the danger is twofold. I think they're worried about an unwind of Tether. They're worried about, there's a lot of things to worry about with Tether. Even though no one in the crypto space really cares at all. But if Tether was to unwind, if Tether was to actually have like a real audit, and we found out what they really have and what they don't have, I think people would be quite frightened. And that could create a panic. And the government's contention, and I'll get through this, but essentially they're like, these guys have all of this US debt. What if they just fire sale that shit on the market? I mean, there's an argument there, but that's no different than any third world country having a shitload of US debt and they go into some sovereign debt crisis and they have to have a fire sale on US debt. The government has money. So I guess I'm not sure what the worry is. If the US debt is legitimate and these guys purchased it and you allowed them to, you can't have your cake and eat it too. Like, listen, we'll sell it to you, but don't you dare sell it back. Why? It's mine. It's my shit. I own my shit. I can sell my shit whenever I want. No. If you sell it too fast, we could be in trouble. Then maybe you're selling it too fast, Treasury. Anyway, so there's a lot, like when you think about that argument that the Treasury is making, it's a pretty weak one. Like, is US debt as good as you say? Is it tier one? Is it like pristine AAA collateral? Well, then there should be no problem flipping it on the market. The Fed certainly had no problem about strip mining T-bills during their stimulus. They stripped out the most quality collateral in the market. They didn't say have a problem with that. I don't see. Anyway, this seems like a pretty weak argument, but we'll see. The Treasury Department's panel of Wall Street advisors see the tokenization of U.S. debt and other assets providing some significant potential advantages, the group contended in a new report. I bet that is dry as hell. You want to fall asleep now? Read that. Anyway, they envision an inevitable need for the kind of heavy central hand that may rankle the crypto sector. Yeah, they want complete control over stablecoins. And on this one, I'm not super sure I disagree. I mean, it would have to be the Treasury, not the Fed. But I don't know that I'm comfortable with any old half-ass. What happens when the jackwagons over at Singularity DAO make a stable coin? Would anyone here trust that? Would anyone here trust Singularity SDAO USD? Anyone? So any jackwagon, like I can make a stable coin and just say there's money behind it, and you have to just trust me. You guys transact it, you transact it. That's what it is. So this is like those wildcat days where banks would just show up around mining towns, and they would just show up, they start trading their new currencies for gold or whatever, and then just you're gone. They just disappear. Take your shit and go. And so there's a lot of that potentially. So cryptocurrencies and the tokenization of U.S. treasuries were treated with increased seriousness in the digital assets views issued by the Treasury Borrowing Advisory Committee, the T-back. They T-backed us. We got T-backed. Would I trust a government-issued CBDC? More than Tether? Yes, because the government can continue to issue. The thing is, Tether doesn't have unlimited US dollars. Governments do. Governments have unlimited of their currencies. It doesn't mean that currency is going to keep some value, but having outside entities that can't issue currency shouldn't be issuing currency. I've always thought that was very spammy. I'm not a fan of stable coins that are not backed. I mean, Circle is the only one that's backed by money. We don't know what's Tether and these other ones. And Justin Sun has one, like on the Tron network. It's like, come on, man. Like, it just feels very sketchy. Anyway, the group of private sector financial executives from big name firms such as Citigroup and Goldman Sachs, both of those that have been fined huge for doing all sorts of illegal shit, never mind that, is assigned with helping guide the department's debt management, and it shared its thoughts on tokenization and stablecoins, issuing a warning specifically about Tether, which I agree with. Tokenization has the potential to unlock the benefits of programmable interoperable ledgers to a wider array of legacy financial assets. Yes, cool. It could reduce the risk of settlement failure. It could reduce the time. It could increase transparency. Yes, all these things. We love it. Woo! That's why we're in crypto. Even a small incremental improvement in a very large market like the Treasury market could be impactful at scale. Yes. However, it suggested caution and the need for the development of a privately controlled and permissioned blockchain managed by one or more trusted private or public authorities. Now, what they're specifically talking about is an inter-treasury. This is what it seems like, an inter-treasury stable asset that could settle transactions in semi-real time. They're not specifically, the way I understand it, they're not talking about a currency for the people. So this is not that. This is something that would live probably in FX markets and in repo, and in the treasury market, right? So buying, selling, lending, pledging, repledging. Got it. And this is their quote: "The way forward should involve a cautious approach spearheaded by a trusted central authority with widespread buy-in from private sector participants." Well, a trusted central authority, yes. A lot of widespread buy-in from the private sector, yes. You need those things. Is the Federal Reserve the authority? No. But you know what? I probably trust the Federal Reserve more than I trust the guys at Tether. The guys that apparently do more business than the entire region where they do banking does business. So like when $1 billion goes into the Bahamian banking system, somehow Tether has 18 billion. They're like, but how did you get 18 billion out of 1 billion? We got it. I know, but how? We got it. Yes, but only 1 billion entered the system. So how did you get 18 billion? We got it. Okay, man. Okay, Paolo. Whatever, bro. And then they spam that fake shit onto exchanges and they buy real stuff. It's like, well, that's the only difference is they take their fake money and make real money. The Federal Reserve takes their fake money and doesn't make real money. Maybe the Federal Reserve should learn something from these scammy stablecoin operators. They're like, this is how you do it, buddy. All you got to do, you got to take the fake money and make it into the real money. Dummy. You guys just left your shit as bank reserves. No one cares about bank reserves. You got to turn that into something that people like. Anyway, the report also delved into the rise of stablecoins, which have increasingly elected to hold significant short supplies of short-dated U.S. Treasury collateral, of course, and so they can spin up a profit. The way to make money if you're legit is you issue a stablecoin, and you take in $100 and you issue 100 currency units, but the actual $100 that you got, you buy something that's paying you 2, 3, 4%. So now the game is just scale up. Just make as much money holding short-term debt as you can, because that money, all the percentages there is free money. You're just making free money at the government's expense. It's short-term. You're rolling it over all the time. Days and days and days and days and days. Rolling it over, putting cash in your pocket. So 2, 3% of a big giant number is a big giant number, right? And then if you're gambling that 2 or 3%, which you can, because that's free money, and you're gambling it into a market that's going straight up, like crypto, for many years, you win. So now they say they have $100 billion. So these guys are cracking $2, $3 billion no matter what. And that's if they're only racking 2, 3%. So think about that. Think about how much money they make off your money doing nothing. And that's if they're legit, and we know they're not legit. So anyway, they said that the report delved into the rise of these stablecoins, which have increasingly elected to hold short-term treasury collateral, a situation that will be further encouraged by future regulations. It also included a statement about the stability hazard from tokens like Tether. And their quote was, "The collapse of a major stablecoin like Tether could result in a fire sale of their U.S. Treasury holdings." This is the part I have a problem with. That's not a good argument. If history serves as any guide, stablecoins will need to be regulated like narrow banks or money market funds to prevent contagion. I do agree with that. They should be regulated. You shouldn't just be able to just open up a fucking chop shop and spit out US dollars. To prevent contagion of stress in stablecoin markets to broader financial markets and the treasury market. I don't like their argument that we want to protect the treasury market, and that's the argument. That's not a good argument, because a private company can buy a private citizen can buy as many treasuries as they want. If you buy enough treasuries, they're going to say that you need to be regulated because you're buying treasuries. So yeah, I think auditing, I think regulation, sure. But look at what happens in repo all day long. All sorts of shit gets traded that people don't own. A piece of collateral used 8 times, 10 times. What kind of unwind risk is that? There's only one piece of collateral. 8 different people lent the same thing. There's one egg, and there's 8 people with a claim on it. So only one of those 7 people ain't going to eat an egg if that thing unwinds. So either your debt that you're selling as a treasury is quality or it's dog shit. One or the other. If you're worried that these dudes that are buying it might dump it in a fire sale, then your collateral is dog shit anyway, or you dump too much of it on the market. Either way, you're wrong. That's my opinion. Anyway, Tether's, Tether says they have more money than Jesus, so who cares? He says, doesn't matter. Anyway, so when it comes to stablecoins underpinning tokenized transactions, the advisors suggest that central bank digital currencies will likely need to replace stablecoins. And I would not, they say it should replace stablecoins as the primary form of digital currency. I disagree. I don't think it won't be central bank digital currency in the US. It'll be government issued digital currencies. It would be a TDC, Treasury digital currency. The Federal Reserve is not an issuing authority. The Federal Reserve doesn't make currency units. They swap bank reserves on occasion, and they keep a weird, gooey balance sheet that's financed by the Treasury and managed with funny money. It's a very weird thing that anyone buys in. What a bunch of whack jobs. Anyway, any potential CBDC that's issued by the Federal Reserve would be apparently managed by private sector banks. And this is what the Fed said. And that's where a lot of lawmakers are like, no, my friend, that's not going to work for us. The Federal Reserve that doesn't deal in money, that's a private institution of 12 private banks, is not going to issue US dollars and have it be run by the Jamie Dimons of the world. Get off the fucking gas. That is never happening. And if it does happen, Bitcoin will be $1 trillion because no one's going to trust that shit. The first time someone gets locked up, locked out, Jamie Dimon pulls more of his shit where he goes in, they shut down a bank, and he goes in and buys up the assets he wants and has a loss sharing agreement with the U.S. taxpayer, whatever the fuck that means. Oh, yeah, sure, Jamie, we'll share in the losses just as long as you win, you piece of shit. So I don't know, man. And also, think about this. The phrase, the fish will prosper where the water is murky. Do you think any of these politicians want us to know in real time what they're doing with their money? I don't know if these people get that we can see. You can call it a central bank private currency. We can see where it's going, bro. It doesn't take a fucking genius to see where the money's going. Because ledgers, because decentralized, they're not going to make it private. It's not going to be Monero USD. It's not going to be. That's not the way this will work. It's not going to be Zcash or Dash or Midnight, whatever the newest failure is by Cardano. No. So, in for a penny, in for a pound, bro. You made your bed. If they have a digital currency that's issued by any of these buttholes, we'll be able to see it float around in real time. You'll have whale alerts the same way we have whale alerts. Oh, they just released another billion XRP for Brad and Chris to sell against you. It'll be like, 4.6 billion TUSDs just went over here. Like, what? Oh, what's the government doing? Oh, they don't want that. That's probably we're going to get there, but I don't even know if they're thinking about that. So anyway, so real quick, yes or no? Who's in for a central bank digital currency managed by the Federal Reserve and private sector banks? Who's in for that awesome piece of tech? They probably build it on optimism. That's the only good thing. Okay, we'll switch gears. Okay, Kraken. Let's go over here. What? A new desktop app with badass graphs and some more crap like that? Sign me up, bro. I like Kraken. It's not super liquid. You can't get out of stuff so quickly, but Kraken's badass. Kraken Desktop has now been launched. It is a customizable desktop app for advanced cryptocurrency trading inspired by CryptoWatch. What? The app, designed with the Rust programming language, offers low latency and high reliability for immediate reactions in real-time markets, meaning TA guys. It includes advanced tools like ladder trading and price alerts, enabling strategic trading operations and effective market monitoring. The monitoring part I like. Kraken Desktop has officially been launched. It's an application designed to meet the needs of the most demanding cryptocurrency traders and investors. Inspired by the CryptoWatch tool, which was discontinued in 2023, the new platform is a robust and fully customizable option for real-time market tracking and advanced trade execution, offering full access to the exchange's spot and futures markets. I don't want a spot or futures markets. I want options on Bitcoin. That's all I want. I want options on my Bitcoin, and I want options on my Ethereum so that I can take these mostly non-performing assets and make them performing. Instead of getting 0% a year on Bitcoin, I'd love to make 30% or 35% a year, which is just about what you can clock selling options, selling out of the money calls and cash secured puts against your cash. You can make a whole career out of that. It's so easy. Part of me wants to set up a foreign account. I have like friends all over the world. Just set up a foreign account and just do it in another country. But I'm not going to, because that seems kind of whatever. But so much money that's just left on the table because it was very frustrating. And we had Ledger X for a while, not the Ledger hardware device, but the options platform. But it was never very liquid. You couldn't really. I had trouble posting more than about 3 or 4 Bitcoin, getting those stretched out each week. It was almost impossible. It was a little easier with cash on the cash secured put side, and I sold out of money puts. Matter of fact, I got put in once in a year, and I sold puts every week, week in, week out, every week. Yeah, I mean, we would do options. There's no point. There's nowhere to trade it yet. Now, options are coming. The option chains are coming for the ETFs, but now you're back to the ETF show, and you're back to having your money with these a-holes. I don't know, man. It's very frustrating. Anyway, there's a lot of money to be made in this, and a lot of easy. And it sounds easy. Selling options is easy. Buying options is foolish. 90% of all options of those contracts expire worthless each week. 90%. I want you to listen, because I know some of you still play options. 90% of options contracts expire worthless. As a buyer, if you're a buyer of options, you're a fucking idiot. However, there's a lot of idiots, as you know, when you see these markets unwind because of leverage. There's the other side of it, where you are the casino and you are selling options against your asset that you're sitting there in your account doing nothing. You crack 0.5%, 0.75%, sometimes 1%, depending on the volatility, every week. Bitcoin's at 70,000. Let's call Bitcoin 70,000. Would you accept 1% a week to sell the $80,000 calls on Bitcoin? You get called out, you get your 1%, okay? And you get 10K on top of the Bitcoin you just sold, right? Which is another, what, 15%, 14%? So you cracked almost 15% that week? Come on, man. So be a net seller. Yes, this is the thing. If you're a net seller, you're not gambling. All you have to lose as a seller is some potential gains. And things always mean revert. You'll always get back in. So then if you get called, so the game is put your way in, call your way out. Anyway, there's no point in us discussing it because we can't mess with it right now, but I do think that's coming. I just hope it's coming sooner than later. Anyway, but this is cool. So the idea is that this app is ensuring a very low latency interface, basically for degen traders, people that want to trade. It's available right now. The app is for Windows, Mac, and Linux systems. And it offers a bunch of advanced tools that have where you can have multiple windows open and ladder trading. It allows multiple limit orders. You can place them all over the place. Users can access advanced order types like iceberg and trailing stops and a variety of technical analysis tools. It's definitely worth checking out. And you can set price alerts, which you can do kind of anywhere, but still kind of cool. Still kind of cool. Yeah. So anyway, with the app, they aim to let each trader configure their own workspace according to their own, personal style and trading strategy. And you have a bunch of customizable modules, up to 48 on a single screen. And then I guess you could be one of those dick bags that has like 7 monitors. And you have price charts, order books, market summaries, cross-market comparisons. Probably going to be some good tools that Brandon and I can use when we're showing charts. I'll try to get Brandon. I don't know if Brandon's got a Kraken account, but I'll try to get him to get one so we can use some of these cool charts. So I'm not a hater. I like this kind of stuff. I don't use it so much, but I like having the data and having it all on one screen is pretty cool. You shush your mouth. Anyway, the exchange just introduced products like KBTC on Ethereum and Op Mainnet, and is preparing to launch its new layer 2 called Ink, which is part of the Op stack. So that'll be our transition into this next article, which I thought was interesting. And let me just bring this guy over here, see if I can get it. Boop. Oh, what? What is that? Franklin Templeton is taking its tokenized treasury fund to base, becomes the first asset manager on that layer 2. $410 million fund is also available on Stellar, Aptos, Avalanche, Arbitrum, and Polygon. So Stellar, garbage. Aptos, not proven. Avalanche, garbage. Arbitrum, garbage. Polygon, basically garbage. So cool. Franklin Templeton's spreading its little tendrils. I guess that's good. Their on-chain U.S. government money market fund can now be traded on Coinbase's Base blockchain. That's kind of cool. It's the first time that an asset manager is building on the layer 2 blockchain. So it's good for Coinbase, I guess, good for Base, and it indirectly and vicariously good for Optimism. The fund, which has 410 million market cap, is available on 5 other blockchains, with Stellar being the primary network, meaning there ain't shit going on with that fund if Stellar is the primary network. Because, I mean, I'm not going to say nothing happens at Stellar, but mostly nothing happens at Stellar. It is Jeb and Caleb's dumpster fire shit show. And I've actually talked to some of those devs, like in not Twitter Spaces, but back in the Clubhouse days, and they just were not sharp. Like, not at all. I better not be talking to anybody that's a designer or an engineer in the crypto space, and I better not walk away thinking they're not sharp, because I don't know shit about that stuff. And if you know less shit than the no shit that I know, we're in trouble. And that's the feeling I got. It was me and my buddy Alex. We were talking to these guys in one of those big rooms, and we just kind of all collectively were like, these guys are slow, man. These guys are daft, like thick as pig shit. So not good. Anyway, Stellar, no bueno. The Stellar blockchain works fine, but the people there building stuff, they're no good. Anyway, Base becomes the 6th blockchain that shares of the fund can be traded on. They're available in all these other places which you would never go. This is the first large asset manager to directly launch on Base, which is a clear signal, they believe, of investors and issuers of what's to come. So I'm guessing they think at Coinbase that a lot of other big companies are coming that way. I mean, why wouldn't they? They're already dealing with Coinbase Prime and they're dealing with Coinbase custody and things like that. So kind of makes sense, right? The layer 2, which went live in 2022, represented a pretty big step in the evolution of Coinbase, opening a new venture for the exchange beyond being a marketplace for crypto. It's since become a fast-growing part of the company's business, handling 55% more transactions in the third quarter than in the second quarter. That's a lot. Base became one of the most popular layer 2 blockchains in the ecosystem. It currently has more than $8 billion in total value locked. So when you see TVL, that's what that is, total value locked. And it's quickly moving past some of its more established competitors. Layer 2s essentially are designed to execute transactions faster and cheaper than the base Ethereum blockchain. And so they are a popular place or choice for these kinds of products. Financial institutions like Franklin Templeton are increasingly taking advantage of fast, low-cost on-chain technology to modernize the financial system. Cool. Hey, man, I'm all for it. Good. Yay, Franklin Templeton. Woo-woo. What does it mean for Base? Not that much. But it's another, like, social proof that there's some value there. So, yeah, that's kind of cool. All right. We're going to switch gears. And let me see. Let me knock that guy out. Boop. Let me knock this guy out. Boop. Getting all this superfluous text off the screen. Boop. Boop. And we're back to Stoicism. Ooh. Okay. I'll bite. Let's do some brain stuff. Let me get to the brands. Let me get to our buttons. We've got to expand our minds. Whoa, buttons. Screen's glitching on me. Here we go.
Hello. You're late.
You're bad at math, but I'm giving you an A+ in confidence.
Just doing what I gotta do.
Extra credit.
All right. So, we're not going to pay too much attention to markets. We'll go into that tomorrow. There's going to be a lot. We're going to talk about a lot of setup tomorrow behind the wall over what you might do tomorrow and over the weekend to kind of prepare yourself for Tuesday, which is going to be a handful. And I think we may do a stream in and around the time where Pennsylvania might come home. We'll see. But for now, let's talk a little bit different. Let's talk Stoicism. And let's talk about how some of those, we could learn some cool things that might help us be less emotional, or at least somewhat mastering our emotions, or a little bit more financial success. So this kind of goes along with game theory. It goes along with realizing your cognitive biases. But this was specifically from this discussion this guy had about the Marcus Aurelius and some of the things he said. And I was like, oh, there's kind of a cool way to look at emotional dexterity and emotional control as it relates to your investment journey, because I feel like more and more that is the main problem that people tend to have, is that they become emotional and they make bad decisions, and then they make bad decisions on top of their bad decisions. And then it's like a doom loop, like a spiral, like it's like the things in the toilet and they just go down into a dark hole and you never see them again, hopefully. You have power over your own mind, not outside events. Realize this and you will find strength. Well, that seems pretty obvious, right? Apparently not to everyone. Apparently not to anyone that does TA. But anyway, we invest, most of us, especially in the beginning, on an emotional roller coaster, right? We fear these market downturns. We hate seeing the markets red. On the days where it's red, we're like, oh no. It's like, even it might be red by 1%, 17%, doesn't matter. We get greedy when it's going up. If we sell too early and it keeps going, we're mad, we're angry. Now we're talking trash about this thing because I decided to exit out at $4. Now it's at $6. This is bullcrap. What, are people stupid? And they're like, and then we get anxiety when it's up and down, and we start panicking. And the idea is that if you had a more similar stoic kind of philosophy to your investing, then you might be able to better navigate these emotional hurdles and lead to better decision making. And that means more currency units, right? Just make better decisions than your peers over and over, and you win, like this amazing coffee that I'm having. It's kind of okay. All right. And so what am I even talking about? Originated in ancient Greece, founded by Zeno of Citium around 300 BCE. And some of the prominent Stoics, Epictetus, we quote him all the time, the Roman Emperor Marcus Aurelius, Seneca. And the core principles are essentially the dichotomy of control, emotional resilience, strength, and virtue ethics, which ethics, most people in investing waved bye-bye to ethics a long time ago. But the dichotomy of control is essentially focus on what you can control and just accept what you can't control. Don't sweat sunsets. What can you control? What is anybody in here? What are the only things that you can control? Anyone, just throw out your greatest, spammiest answer. What is the only things that anyone here, any of us, can actually control? Your thoughts and your actions. That's it. Yeah, I mean, your thoughts and your actions. Yes. What can you not control? External events and the outcomes of my actions. And, ideally we could control our emotions, but that's tricky. But that's all we can do is our thoughts and our actions we can control. External events and outcomes we cannot control. Robert, you can't control your wife and kids. Stop it. And Junder, you can't control your bladder. I don't know who you're talking to. Anyway, emotional resilience. So you need to cultivate a mindset that is kind of indifferent to pleasure and pain. I had a friend of mine he's kind of really popular in Japan. He's kind of a, what do you call that? Not a thought leader. Well, maybe. I don't know. Anyway, he's very famous in Japan. And his whole deal is don't ever get too sad and don't ever get too happy. Don't celebrate very long a success and don't lament very long a failure. He's like, you got to become indifferent to that stuff. It's just going down a path. And the idea is that you aim for inner peace regardless of all this noise and shit and external circumstances. Right? So cultivate a mindset of indifference to both the good and the bad, the pleasure and the pain. Don't be like, woo, woo, we won. Yeah. No. And also don't get all broken up that you like, especially in investing where we're doing this over and over and over with a lot of different assets. What an asset does is something completely out of your control. You use the information that you have and you make the best decision you can. You have no control over it after that. None. So getting unhappy or happy, it doesn't even make sense. Those emotions, they're not fair to ascribe to the outcome of investments. You have no control over it. So aim for inner peace regardless of those external circumstances and those outcomes, right? It doesn't matter. You make your decision. Hopefully it works out. If not, just best manage the situation with critical thinking, ideally some game theory. And then the virtue of ethics is live in accordance with reason and virtue. So prioritize education, wisdom, temperance, courage, justice, these kinds of things are pretty important if you're looking out along the time horizon. And like, I should even be, so here's like one thing I could change. I could stop making fun of all of the douchebags over at Singularity DAO. I could. There's some people there that I like. Okay, there's one person there that I like. And the other ones, I don't like them because I don't like some of the things they've done. But I shouldn't go out to bash them because it doesn't matter. Their behavior is not going to change no matter what I say. Matter of fact, it might get worse. And that's that. Nothing I say is going to affect a group of douchebags. So there's not really any point. So, we all got things we got to work on. Temperance, perhaps. So how do we apply this stuff to actual trading and investing, right? Instead of it just being these kind of esoteric, like, it's like, okay, be better. Okay, bro, I'll just be better. What the fuck does that even mean? So how do you apply this stuff? You want to stick. This is why we talk about programmed entry, programmed exit, dollar cost average. You want to develop and adhere to a well thought out trading plan. You stick to the plan, right? Once you've made a decision to enter an asset or exit an asset, you stick to the plan that you've created. You don't deviate when the market does this and that. No, you're moving to too many different bits of noise. You're not waiting when things are coming in fast. You're not weighting those things correctly. So develop and stick to a thought out plan. Stick to the plan. And it doesn't have to be my plan. The 10x take 20, 2x take 10 is my plan. You create your own plan, but you stick to it. Otherwise, you're going to have too many dials, too many moving parts. And why is because this will reduce your impulsive decisions that are driven by rumors, noise, short-term fluctuations, and more shit that you have no control over. Okay? Embrace uncertainty and accept your fate. What a amor fati. Right? So acknowledge that market movements are beyond your control. So I want everyone in here to write, the markets are beyond my control. I swear, I spend 10 minutes a day in the chat, and that's all I need to like come up with these lectures. Just 10 minutes a day, just reading people's thoughts. Markets are beyond my control. Why is this important? Because it will minimize the stress over unpredictable events like economic shifts or weird election outcomes or geopolitical tension or spammy, thises and that's, especially in the crypto space of illiquid assets on illiquid exchanges traded by mostly sketchy individuals, right? Markets are beyond my control. So don't stress about them, right? You have no more control over the markets than you do over the sunrise. It's happening, bro. This allows you to have some emotional detachment, right? So you can use logic and game theory and your own kind of fundamental analysis rather than emotions to make your decisions. So set your predefined entry and exit points. I don't use stop loss orders. I simply put limit orders. So when I buy something, I'm willing to eat a little bit of volatility for the longer term picture. I'm thinking 18 months, 36 months out. That's the win I want. I don't care about the day-to-day stuff. I'm not trading. I'm trying to invest. Sometimes an investment becomes a trade, and then use your logical mind and decide if it makes sense to exit. But having predefined entry and exits and these kind of controlled 10x take 20, 2x take 10, these kind of rules-based entry and exits, dollar cost averaging, and then rules-based exits, it prevents panic selling and greedy FOMO type buying. And then I want you to get this kind of concept, premeditatio malorum, which you're like, what the shit? Sounds like something that they say to John Wick before they brand him. No, this is the premeditation of adversity. And the idea here is to anticipate potential losses, and plan for worst case scenarios so that you're not shocked by anything and you're not emotionally rocked by it. And this, it'll prepare you for mental setbacks. It reduces shock. It reduces the emotional impact. It reduces the stress. The samurai version of this is that they imagine all these different ways they can die. And then there's really nothing surprising when they go to battle. They're like, okay, well, what's the worst case? I get my head chopped off. A horse runs me over. I get pushed off a cliff. Well, whatever. I've done birds attack me and eat my eyeballs. Like whatever, because they've seen it all in their mind. And if you've seen it all, looking at your portfolio and it gets nuked or this or that, or it's a scam, like whatever, if you've premeditated on these potential bad outcomes, right? Don't obsess, but just think about it. Okay, what could happen? Shit could go to zero. Could be a scam. This could be illegal. I don't know. So you think about these things and it starts to ease your emotional connectedness to these things, which there should be no emotional component. So now you can focus on the process rather than the outcome. Focus on the process of investing. So evaluate your success based on the quality of your decision making, not the financial result. Again, which is the thing that you don't have control over. Are your decisions quality? Are you making consistent, rational judgments and strategies rather than just chasing green candlesticks and news and stupid crap like that? And this, again, helps you practice patience and discipline. So avoid over trading. You don't need to be in there meddling, right? Stick to your original investment principles. If those principles need to change, that's your education will change those over time. And what this does by being disciplined and principled and like sticking to your plans, it helps you enhance your long-term gains, and it reduces, again, reactivity. You need to act, not react, right? Because nothing should surprise you. And a couple of things that will help you then would be journaling, some kind of mindfulness and meditation. For me, it's playing VR and shooting up people with AK-47. And regular reflection. So what does that mean? Journaling. Keep a record of your trades. Keep a record of your thoughts when you're going to buy something. Why did you buy it? When I go into live coin watch and I adjust my positions, like if I'll put reward, okay, 120 XYZ coins, and then I put on Bitrue or at Coinbase or and I'll put Y. I'll put a little, it takes 10 seconds. So I kind of journal every single trade. So I could go back and look at that trade and go, why did I do that? Oh, because of this. Or if I sold out of Cardano to get into something else, I said, left Cardano for this and why. Just a real quick. So that's my kind of journaling. I could do better. But then again, we have an hour a day of journaling 6 days a week. So I guess I could just go back and watch these videos. And that's a kind of a form of journaling. But you guys should have some journaling, right? Keep a record of your trades, including the rationale and the emotional state you were in when you made the trade, why you made the trade, things like that. You could do the why, where, who, the interrogatory, the 5 interrogatory statements. Anyway, think about past investment decisions you made. Think about the ones that worked out and the ones that didn't work out, and then go back and think about the way you planned for those. Was the planning the same? Were you planning or were you spamming? Then incorporate some mindfulness. Remember we say think about thinking. Spend some time thinking about thinking. So incorporate some daily practices to stay grounded. Some time where, like, I don't, when I'm in any vehicle, I don't listen to music. Ever, period, full stop. There's enough things to distract you. For me, car time is silent time. Silent. And this obviously improves your focus and your ability to kind of stay present in the environment and also not die in a car accident. But also this idea of some kind of mental quietness each day, even if it's like 15 minutes, A lot of people get that when they're working out. They'll put on their headphones and listen to some kind of little weird alpha brainwave music or whatever, but it will improve your focus and it reduces your reactionary behavior. And then have some kind of regular reflection, meaning assess your alignment with whatever your version of these Stoic principles are, and just make adjustments as needed. None of us are nailing this stuff all the way. None of us. We have different levels of success, but a lot of that's luck. I've been wildly successful and wildly lucky. And I'm not sure which one more. I think it's a little bit of both. I was lucky in the beginning, and then I was like, oh, I don't want to give it back. And in my search for the proper tools so that I could build a moat around what I had made, I actually learned better tools. I mean, I actually created like better skill set to go make more currency units than before. And every time I took a big loss, I got 10x back of it in kind of an emotional adjustment, or like a forced educational moment. Good decisions come from wisdom. Wisdom comes from experience. Experience comes from bad decisions. So no one gets it right all the time. You only have to get it right 51% of the time. You get a lot of at-bats. And if your process is good and you believe in yourself, then you can swing for the fences. Every time you get up to bat, you can swing for the fences. I mean, that's the Moneyball side of it. Byron Gilliam did a really good article yesterday or Wednesday. Wait, yesterday was Wednesday. Yesterday or Tuesday. I think it was yesterday, where he talked about that the Moneyball, because baseball, right? That the Moneyball math is you don't go up there and try to get on base. You try to knock that motherfucker out of the park. And if you have a lot of at-bats, over time, you're going to put more over the wall than you won't. If not, it just means that your strategy is flawed. You can fix your strategy. You can clean up your underlying theories. And then you can go try to knock the fucking leather off of it every single time you go up to bat. And you only need a few home runs. So there you go. I want everybody to spend some time thinking about what your philosophy is in the way that you invest and the way that you exit, and what the whole point of what you're doing even is. And I think that would do you a lot of good. So, and look up Stoicism and see how it could give you a couple of tools. I mean, a lot of the Stoics, they ran a lot of the modern world for a long time. They did quite well. And so we can learn stuff from those guys. All right. Stay in school. I wonder why every time I put this music on, you can't hear it. I can't hear anything. Anyway, there it is. Okay. We'll be back tomorrow. We'll have our election game plan. I mean, at least until the crap show that is the weekend comes. Stay in school. Don't do drugs. Don't do anything by poor, insolvent, drunk. Strung out on meth, grandmother wouldn't do. I don't know what the temperature is where Brandon is, but I know it's got like to 47 degrees here in LA, which I don't like, but it'll be up in the mid 70s later, which I do like. We will see you tomorrow.
Terrified, wandering mind, the seams have come undone. You've been telling lies to these eyes as if they'd never seen the sun. Now you've let your guard down and your heart is exposed. Now you've let your guard down, but how could you have known that I'm the big fish round here? You're a small fish. I could make you disappear. You should know this. I'm the big fish round here. You're a small fish